Yeah, so I spend a lot of time on China. I do think that's going to be one of the best trades in the coming years. And the most important reason why is the dollar. I know I've been on with you a couple times. I say, watch the dollar, watch the dollar, watch the dollar. Well, sure enough, in the last couple of months, the dollar started rolling over materially. And China and emerging markets have started to get a small bid. I think you're going to see that follow through as we turn the calendar. As far as the protests, I think the protests are really a positive situation because if you look at the Hang Seng Index and the Shanghai Composite, I went back to April 15th of 1989 to June 4th of 1989, which were the protests and then the Tiananmen Square incident. The next 4 years, from 1990 to 1994, the Hang Seng was up 380 some odd percent, and the Shanghai Composite was up 1,100%. So for people saying this is the beginning of the end, I think this is the beginning of the beginning. In this case, it does seem now that Xi has secured his power domestically that he'll be somewhat more responsive to these protests, and we saw as much this morning. They started coming out, and we started to see leakage where they were preparing press conferences to say the current variant is more like the seasonal flu. Not many people are dying. They're also now focused on vaccinating the elderly, which basically are sending the signals that they want to get the economy open, and they got to do a little bit of ignoring this and declare victory. They can say, look, when the variants were bad, we saved millions of lives, pat on our back. Now that it's like the flu, we have to get on with it. And those who are at risk get your vaccinations. They also have the new nasal vaccine, that inhalable vaccine. That's a positive. So I think what you're going to see in coming weeks is some more press releases that things are moving back to normal. There was one small region I saw this morning that lifted some restrictions effective midnight. So they're actually currently out of lockdown. And I think you're going to see more and more of that to come. There was a modest downtick in cases, but that's kind of immaterial at this point. I think the government recognizes they've largely lost control. And if they don't kind of bend here, they're going to break. In the sense that some of our chip providers will not be able to do business in China, there's certainly a risk of that. But I think, as we look forward, I'm starting to look for more opportunities outside the U.S. That will benefit from the falling dollar. And most of the large tech companies, I like Alibaba. That's a long-term investment, longer than I had anticipated. But that thing is gonna work out over the next few years. So they're less dependent on the U.S. supplies. They have their cloud business, they have their retail business. And the minute that the government pivots and blinks, which it may have been last night, but certainly we'll see for sure in coming weeks, these businesses are going to do exceptionally well, provided the dollar stays weak and we start to see flows into emerging markets. You look at K-Web was down 80%. I mean, it'd be like saying, if you could buy the Dow Jones in 1932, would you be interested after it crashed 80, 90%? If you didn't buy, you lost generational wealth opportunities. I think the same is the case for the highest quality Chinese businesses. And even if the government continues to screw things up in China as they have for the last 12 to 18 months, consistently, repeatedly, against their own self-interest, eventually the virus just dies out on its own, as it did in 1918 to 1920 with the Spanish flu, when there were no vaccines. Eventually, it just runs out of hosts. So we're very constructive on that side. As far as U.S. tech, I think you broach a very important point, Mitch. U.S. managers, one of the data points I look at a lot is the Bank of America Global Fund Manager Survey. And one key tidbit this month that came out, which was about a week and a half ago, is that managers are the most underweight tech since 2008. So everyone's gotten on one side of the boat. No one wanted energy. No one wanted banks in 2020. After they're up, 200, 300%, everyone wants them. And now no one wants tech. Well, if you had bought tech the last 4 times that managers were this underweight, you did exceptionally well, whether that was October 2008, August 2006, August 2004, or October 2002. So we do see a lot of specific discrete opportunity in that group. I think if you look at Las Vegas Sands, which is now mostly Macau-based business, If you look at Win, mostly a Macau-based business, these are doubles and triples over the next 3 years. So I know your audience likes to do things very, very short term, some of them, but if you just step back, and even if it's a pocket of your portfolio, be a little longer term, be willing to double and triple your money with no effort. And that's really, what these opportunities are. I think when you look at LVS, even we own Melco Crown, which is more of a Macau-based provider. These things, the Asian culture is gambling in nature, and the demand for these is going to come back in spades. You talk about pent-up demand. We saw the travel numbers for Thanksgiving this year finally much higher than pre-pandemic levels. Well, wait till you see the gambling numbers over the next 12 to 24 months in Macau and China as people finally get out of lockdown and they want to get back to their normal lives. So these are no-brainers. The licenses were the last piece. Now we'll wait for them to come out and say, wait a second, COVID is like, this variant is like the flu. Go about your business, take your vaccine, wear your mask, and these things could really make a lot of money for investors over the next couple of years.